if you have a financial planner and a CPA, it's really important to have those two on the same page. And you want your financial planner to really have a good understanding of your tax situation. So when they, make decisions for you, they can take your tax consequences into consideration. And you also want your CPA or your accountant to understand what's going on in your investment and financial planning world so that they can give you advice to try and minimize tax bill, essentially. So they each need to understand what the other is doing in order to have a really well-oiled machine and a good experience. If you have two different people serving you, they don't necessarily agree on what's best for you. A financial advisor might be making a recommendation based on their understanding of a rule that they've researched. They might do their due diligence, but if they need approval from CPA or a tax advisor, the tax advisor has to go out and research that and come to the same conclusion as the advisor. And so that can be valuable. You can have two different opinions on something, which makes it great, but a lot of times that leads to indecision. I think in general, the financial planner advisor will take the time to get to know your situation better. They really do have to understand what you're trying to accomplish, what goals you're trying to reach, like in order to be able to make decisions for you and help you invest your money. They're going to have more meetings with you. I mean, they typically will get together to review their situation and ask questions, at least annually at minimum. They'll be in contact more, for whatever reason, whether it's a different investment or, a piece of advice or a recommendation. Where as a CPA, the world has changed quite a bit. There's not as much time to be able to sit with somebody, spend the time that's necessary to really understand what they're going through, what their situation is, and it becomes more of a numbers on paper exercise. I started my career in a CPA world, and so the first thing I noticed was that when I needed information to prepare a tax return for a client, I had to go to a financial advisor to get that information. Sometimes a client had it, which was fantastic. But a lot of times you had to reach out to their financial advisor to gather that information. So you can imagine what that's like. So from the very beginning, when I started my career, I saw this natural fit from just having access information for a client could become extremely valuable from just a purely tax preparation situation. Now, take that information that you have from preparing a tax return and use it for planning purposes, and it becomes even more valuable. A financial planner will ask for your 1040, but usually it's not to make tax-driven decisions. It's to get a sense of what your income is so that they can start to say, okay, well, this is what you live off of. This is how much you might need in retirement. What a financial planner typically is going to do is they're going to look at it. They're going to be making recommendations to you, and they're going to go say, look, I can't give you advice on the impact of this. So go ask your CPA for that advice. A lot of times CPAs are very, very conservative in nature. And for them to take time and actually analyze a situation, they have to charge you hourly for the most part. And, for the client, they're now paying, advisor, and they're now paying, a CPA. And so the fees go up, and it's just a really hard situation to manage at times. Your financial planner, number one, needs to have a copy of your tax return every year from your CPA. So that should be like a no-brainer request that information's gathered. And then the CPA really is going back and gathering information from your advisor, like trying to understand what your unrealized gains are, what your required minimum distributions are, what types of assets you hold is really, really important to understand that, to be able to make recommendations on how to proceed in terms of withdrawing money or where to save, and all that good stuff. You should have your CPA and your financial advisor in the same room with you during your planning meetings. I mean, that's in theory the way that should work. In order for you to get the best possible advice, they should have a nice relationship where they can ask each other questions and feel comfortable asking each other questions and give each other advice. And that would be a beautiful situation. So it can be done if you have separate partners, and some people like that. It's just, you have to be really interactive with those people and really engage them both to come together. Because I can tell you from experience, if you don't, I mean, they're not reaching out to each other and saying, hey, let's get together and talk about Jim. They're getting together and they're saying, hey, let's see if we can refer each other business and try and develop some relationships. Your accountant or your CPA right now is just purely focused on preparing a tax return. They are gathering information for hundreds of clients, aligning them with your advisor. In order to do it right would have to happen after tax season is over. So after the April 5th deadline, in between the September 15th deadline and the October 15th deadline. So there's this window when CPAs are essentially not that busy, which is from 4/15 to 9/15. There is a window, and it's in the summer months, and CPAs are hard to find during that time because they work so hard during this off season that they need a little break. Back in the day, I used to go golfing for like a week as soon as we were done, and you couldn't find me. You have to be really proactive with your CPA in order for it to work the best way. You should be saying to your account, like, here's all my stuff. Like, I want to maximize my situation. So I want to figure out what the right amount or the maximum amount I can contribute to my self-employed retirement plan is. And then I want you to tell me whether I should put it into the Roth portion or I should put it into the pre-tax portion. And I want you guys to figure out what works best for me together. Those decisions cannot be made in a silo.